What's up, everyone? Welcome to the eighth episode of Investing with the Boys. I don't know about you, but I found a new hobby this week, and that hobby was losing money. It is a brutal, brutal market this week. QQQ is breaking some key levels, SPY's touching a key level. I feel like there's extreme fear in the markets. It's something that we haven't experienced in a couple years, to be honest, this amount of fear. I have some trauma from 2021. I feel very similar to like, oof, is this a 2021 or not? But I don't know. Let's get into it. Logical. How have you been handling this turbulence in the past week or 2 weeks even?
Yeah, I mean, it's clearly there's weakness in the market. When things are bouncing, they're really weak. It feels like this market wants to go lower, but like you said, we're at key levels, so it's kind of make or break right now. And you don't want to like, if you felt like you missed the downside, maybe now is too late to play it. And if you feel like you're rushing to the upside, maybe you can wait for some confirmation. I'm still very much long in this market, but I do have a portion of my portfolio which is hedged. So I have some shorts on that I think for names that feel very heavy and weak right now, like some tech, some banks, stuff like that. And I have a pretty decent size in TLT, which is good because it helps reduce the volatility in my portfolio. And if, we end up getting some sort of slowing economy data, which we have, then, TLT will be a flight to safety. So yeah, for the time being, I mean, look, I've been trading a lot and sometimes it's been working well, sometimes it hasn't. I would say like for people who are not sure what to do in this environment, it's okay to hold an extra position of cash, like extra big than usual. It's okay to wait for strength, to buy the strength. It's okay if you don't nail the exact bottom. And I mean, own things that you feel 100% confident in. And I think that's what I've been shifting my focus to is like, I've been focusing on places where I can find value. I can fundamentally justify the holdings. Like you guys know, I talk a lot about biotech and that kind of stuff, healthcare, whatever. We talked about Arcutis last week. I turned that into a 10% position after our conversation. That has just been showing really great signs. A lot of biotech has been just beaten down. I can really stand by the businesses. That entire sector has been wrongly punished, and I've turned it into a 44% position in my portfolio, the entire biotech weighting. So it's really big. And I do think that one, biotech doesn't have that consumer exposure, which if we did have some sort of downturn in the economy, I kind of like that as a hedge. So I feel very confident from these valuations. We've talked about ex-US before, like China's been working very well. Dude, yesterday, KWEB, the index was up 7.1% after China announced like an insane fiscal stimulus deal. So China's been working well. Latin America's been working well. There's a lot of like different catalysts in those markets. USD has been very weak. You've heard about the German stimulus package that came through. So obviously, Europe is catching a bid. It's been a while that a lot of these other things that haven't really seen any sort of positive gains for the last few years have just been underperforming are starting to really catch a bid this year. And I feel comfortable personally, like, in my broker, I use Interactive Brokers. I'm able to buy stocks in other countries. So, I have a Polish stock. I talked about it on this podcast a couple weeks ago. And, I feel comfortable adding in places like that. So I have a good ex-US position. I have a good biotech position. I have some small caps and rate sensitive names. Yesterday, we saw MBA mortgage applications come in 20%. The previous was like negative 1.2%. So clearly with the rates coming down, mortgage activity is coming back up. So I'm long rocket companies, for example. So I think that, we're going to start seeing a lot of these places where it's been really tough for them to make money with higher rate environment, higher USD environment. I think we're seeing that shift there. And if you think about like biotechs, for instance, like those have been left for dead. Maybe they've been even shorted to oblivion because people have seen no reason to, to worry about those catching a bid in their face. But now with a weakening, like lowering rate environment, maybe we start seeing M&A finally pick up in that sector, which is what I've been really looking forward to. I've been a year early to that thesis. But, just yesterday, I saw a big acquisition. Well, it's a smaller company, but still, I mean, maybe we're starting to see M&A pick up in biotech. And yeah, these valuations just don't make sense to me. So again, last thing I'll say before I pass to Sam and get his words, buy things that you can fundamentally justify holding and the value's there and you feel confident about the long-term future. And otherwise, having some hedges in place and having a little bit of cash or bonds or whatever you feel to get your slowing down the volatility is not a bad thing to do right now.
Yeah, no, I mean, I agree with that. I think especially when I also picked up a hobby too, and I think I enjoyed losing money so much last week. I decided to continue with this week. I didn't just pick it up this week. I don't know what you were doing last week, but I was enjoying losing money last week as well. But I think I found a little bit more comfort as well, just continuing to actually drill and focus a little bit harder on the research and deep diving that I've been doing in the companies that I've been researching. Said that thing twice, but anyways. I find more comfort in doing that because then it kind of solidifies my conviction with certain companies. I know we had the debate with conviction and everything, but from my perspective, I need that with my companies that I invest in. I need to know what I'm in, and I need to know that it's going to make it in the long haul. Like, I'm not so sure if I'm so concerned in the next couple of quarters. I'm really concerned of the long-term trajectory, and there were a few names that came out with earnings this week that I was very happy to look at, and names like GitLab, Marvell, and Broadcom as well. I don't have Broadcom anymore. I decided to invest in Marvell as well. But, these are companies that I feel comfortable adding more money to because I do invest on a weekly, I do add money on a weekly basis. And I do plan on continuing to add a lot more to my portfolio, even as hopefully the market goes down. Like, I'm not going to lie, I hope the market goes down more so that way when I do continue adding, it's at better prices. I feel more comfortable adding into weakness versus strength. And I know some people are the other way around. It's totally fine. But I've really actually enjoyed doing that more and focusing on that more than looking at my app and seeing myself lose 5 figures almost every single day. But well, not every day, but something like that. But to be honest, at the end of the day, I've never really, if I zoom out, and I always tell people, like, when in doubt, zoom out. Like, look at how much the market's been up in the last 2 years. Okay. Yes, we're down 7% from the all-time highs, but we're also up like 50% from the lows in the last couple of years. Actually, more than that, considering that it was like back-to-back 20 plus years. So, and on top of that, my portfolio is up way more than that. So even if I'm down year to date today, which I admittedly am down year to date, the year started out pretty crappy and then it became phenomenal and then now it's crap again. But at the same time, I try to focus more on the long term to kind of help me get through this. And don't get me wrong, like, dude, this is not easy. I think probably several times during the day I questioned myself, like, I should just put my money in the S&P 500 and just forget about all this, right? I live life so much, like, so clean after that. I won't need to do all this research, whatever. But at the end of the day, like, dude, I love doing this stuff. Like, I can't just turn everything off and just avoid it. Like, even when I'm on vacation, like, I love reading up on this stuff. I don't want to say it's become a part of my life, but like, I enjoy that being a part of my life. And yeah, if you're in the stock market, you run the risk of every single day that anything can happen at any point, a black swan, that can just pull the rug on you and you will lose half your portfolio in just a couple of weeks. And some people experience that. Some people that were a little too hard on the market lately, but almost everyone experienced that during COVID, March 2020. And that was rough, but that was fast, right? So people aren't used to like that. People have been very accustomed to like that quick pullback, that quick V-shaped recovery. But in 2022, people got murdered. Like, people just stopped investing in the stock market after that. Like, they brushed off their hands and it's like, I can't do this anymore. This is too much, right? And we're not even more than a few weeks into this. And I'm starting to feel like this might last a little bit longer than people think it might, and even if we get a bounce here and there, like, I'm fine with the fact that I like you said, Logical, I'm not going to pick the bottom. Like, any buy that I do today, I expect to go down further. And today in the market, like, we're not even 10% down in the S&P 500. And I think we're actually going to probably get there. And I think there's still quite a bit of overvaluations in the market that aren't necessarily justified, at least in the next couple of years. And, while it sounds kind of hypocritical that I'm saying that I'm investing more than a couple of years, but I don't, at the same time, I don't want to be paying some ridiculous amount for something where I expect those returns maybe 3 or 4 years from now, but I'm paying that upfront today, hoping it goes up higher. I want to have some sort of margin of safety in that. So, like, these thoughts are just running through my head all the time. And it helps to not look at the stock market like every hour. Certainly that's definitely helped me. And yeah, I mean, just focusing on the long game.
That's great. I would love to get Shai's thoughts on this too.
Yeah, so I think what's going to catch a lot of like the listeners' surprise with what I'm about to say during these kind of environments is like, I don't add to speculative positions when we get these kind of pullbacks. And
Yeah,
I think
no,
that's really
agree.
important to know. Where like you guys know, I'm a thematic investor, and I'm really bullish in quantum space, specifically those thematics. I haven't added anything to IonQ or Rocket Lab. Why is that? There is only a few moments a year, like honestly, more than two is really rare, but like one or two a year where the QQQ pulls back 10%. It hits a correction, for example, in a matter of a month. Those opportunities take every stock down with it. Every stock. Unless you're ex-USA, US. But like most domestic stocks, they're all down. So you're going to get some 20 to 25% pullbacks and these incredible defensible moat winners that are just pulling back because the market's pulling back. And nothing fundamentally, no thesis cracking their business, nothing fundamentally broke about the business. It's just the market, the liquidity is just causing them to pull back a bit. So I want to add to those higher conviction names that somewhat have a high floor. Amazon's my new number one position. I think having it, I'm treating it almost, yeah, it is my number one position, my new one. But I'm treating it as like one of those like defensive anchors almost. It's crazy to say because big tech is not really defensive, but as a growth investor, it is for me. It's a multi-trillion-dollar company. I think there's a very high floor on Amazon, so I want this to be a top position. I've been telling you guys, like, I would love to build my Amazon from like 7%. It's been all year to 12 to 15 maybe. Every time it goes under $200, I've been adding. That's a priority. Axon Enterprise, you guys hear me all the time talking about that. They have the best monopoly I've ever seen in a company under $50 billion, like by far. Valuation is always up there. However, they pull back rarely, and when it does, it's from a macro-driven reason. And I added to that. Cloudflare, I hate adding to Cloudflare from at 100 times EBITDA multiple, but I really do see them as an AWS of the modern internet. So like, if they're down 40% or 35% from their previous highs, like I'm going to be adding just a little. Like I added 10 shares this week, not that much, but I'm not adding to IonQ. I'm not adding to Tempest AI. I'm not adding to Rocket Lab. Even my small cap portfolio, hey, logical. Like you don't even know this. Like I'm not even adding to any of my space, quantum, even my high beta portfolio. I'm adding to the commercial side. I'm adding to, I've been building up my Arcutis, like ticker R. A lot of people don't know the ticker, so I'm going to say it. ARQT. That is, I think they're going to be a monster company. Just they're pretty pricey in my opinion for near term, but like they're somewhat safe. Just look at their price action. I think ClearPoint Neuro is. I've been bullish on them a couple of years ago. I was just like, I don't know about the partnerships if they're actually going to get through to the finish line. Their partnerships have gone through the finish line. So like they're having a lot of pipeline coming in. And then another one was Delcath. I like Delcath. I've been adding to Delcath a little. But here, notice the trend, guys. These are commercial device companies. They're not really exposed to consumers, like Logical said. They aren't these future-looking thematics that aren't in somewhat of a bubble because they've 3 to 5x in a matter of months, guys. Like it's early. Sometimes it could be too soon, too early for like the Redwires, ASTS, which has been really strong for all of us, and Rocket Lab. Like that's not the area to add during these kind of fear-driven pullbacks. And I also think like I want to get a little more micro, and I think Sam, you might know this company. You what?
No, I wanted to, just because you were talking about those names, I just wanted to have a couple comments on them, unless you want to jump into something.
No, let's do it. Let's go for it.
Yeah, I mean, ClearPoint Neuro is probably one of the greatest stocks that you can invest in public markets. It's a picks and shovels play in biotech. And the beauty of that is that they're up to like 55 or even 60 partners by now. I haven't really kept up. I really don't watch this story on a quarter to quarter basis. It's really nice to see that they are making, like progress every single quarter and all that. But like, I don't really need to look at this. I bought these shares in my IRA and I'm just letting them sit there, and I really don't care. It's one of those long-term holds. Nice. Because the way that this company is going to make a ton of money, and the reason why I like this thesis so much is because in biotech, you have a lot of clinical stage companies, right? And a lot of them don't get to the finish line. There's like a 12% FDA approval rate for clinical stage biotechs. Well, when you have 60 partners, you aren't at the whims of any one specific FDA approval. Your business model does not depend on any single partner, right? So you're getting paid during the phase 1, phase 2, phase 3 And if they end up getting FDA approval, then they're going to commercialize, and then their volumes are going to dramatically increase. So you get to participate in all of the upside of this company without participating in all of the downside. Because if they lose one partner, they don't get their FDA approval, that's okay because they have 54 other partners. So I really like this picks and shovels play. And yeah, their TAM is ridiculous size, and it's like a $350 million company. And they paid down debt early. That gives you confidence that this is a company that is going to be profitable, and they're not going to really need any sort of additional funding or anything like that. They're headed the right way. Some of their partners are becoming very impressive. And you mentioned Arcutis.
Wait, before you get to Arcutis, I do want to add some more color to ClearPoint because like this is a position I've been building. I've owned it a couple years ago. I've been really building it up this year. When you talk about the partnerships, like these aren't just like random partnerships, to be honest. Like they have like I think 50 or 60 total partnerships, so many partnerships, dozens. But really, they have like 6 biopharma partners that are really in that finish line, like what Logical was talking about, that are in that fast track trials where it's like there's I think they made a comment where there's like 2 million US patients that are across 4 or 5 indications that are using ClearPoint enabled deliveries. That right now is transitioning to translation to like $250 million in revenue with 70% gross margins. Pretty incredible. And a lot of these multiple therapies, like they're on track for regulatory approval in the next 24 months. So the scale of what's coming is severely understated because you have these many partners. And when he's mentioning like the picks and shovels play, they just really need one of them to really succeed. And they're going to be printing cash. They're going to be in that fast forward phase. And I do think that they are just like not talked about enough where they used to be known when I talk to people about like they're just like selling capital equipment or disposable navigational tools because that's essentially what they do. But really the way I'm underwriting them is they're architecting a critical pipeline for the next generation of neuro treatments. So they're making sure that every single hospital is capable of delivering all the therapies that they're partnered up with. They have ClearPoint embedded into those operations. It's incredibly sticky, and I think they're the perfect picks and shovels play. And they sandbag their guidance, and that's why I was adding, because if you do the back of the napkin math, like there's no way they're gonna just hit those numbers. Like it's gonna be much higher. Don't know why they sandbagged, but I'm taking advantage of from like the 25% pullback we've gotten recently to build up the position. But you're gonna say something?
Yeah, I was gonna say, you mentioned that they have a sticky product. They don't have a sticky product. They have a concrete in cement product.
Yeah.
Because when you do your FDA application, you're a biotech company. In your FDA application, you're writing, we are using ClearPoint Neuro's device. That means that unless you want to, if you want to replace them, you have to redo your entire FDA trial process.
And you just won't. Nobody will do that.
No,
ever.
Of course not. It's over. Once you're with them, you are with them. And because they're like becoming kind of the standard in the neuro treatment space, everyone's going to go with them because they already have that FDA approval. So there's no risk in using their product. So yeah, what they actually do is their device helps you very like within millimeters be able to treat different parts of the brain.
It's Google Maps for neurosurgeons for your brain.
Yeah, and if you want like let's say you're interested in gene therapy, right? That's a really big field that's coming up. Well, instead of like placing your money on the specific horses, you could just, buy the person who's working with all the different horses, right? So like, yeah, I mean, it makes sense to get exposure to this industry. And yeah.
Can I tell you like my only caveat though? What?
Sorry, what was
How
that, Sam?
big are these positions for you guys?
Oh, ClearPoint's a 5% position in the small cap, so it's like
I thought you were going to say 5% position in your portfolio. I was like, what?
It is 6% for me, 6.4. And honestly, but I was also long this stock at $5 and I was pretty oversized. I've trimmed it a lot. It's sitting at 13 now. I have actually averaged up on this recent dip.
I will say that my only like not annoyance is just like reason why I'm not being so aggressive with my ads is the visibility of their fundamentals is unpredictable. Right now, they're supposed to be growing top line. I think what I'm looking at it right now, actually, it's 30% CAGR on the top line for the next 3 or 4 years. It's unpredictable because you don't know the partnerships, what's going to get greenlit. But like, there's no profitability forecasted at all for ClearPoints.
Well, can I just
4 years.
Sorry, but one of their major partners is Unicure. QURE, and they basically got like, I think they already have like phase 2 approval, and they have like, they're on accelerated path for their Huntington disease, basically cure treatment, and they're a partner with ClearPoint. And basically, I was talking to a life science fund manager guy I really trust, and he was saying like, basically the treatment costs $3 million and they have like tens of thousands of potential patients. So I mean, like, when we're talking about this stuff, it's like really, really big, the TAM.
So why aren't the analysts updating their forecast though? I'm seeing right now they have 3 analysts who cover it, so maybe it's outdated, but like,
well, that's Unicure's numbers, right? That's not ClearPoint's numbers. ClearPoint is going to make
I know, but
money off
I
of
feel like
it.
you can read through that though.
You
Like,
should. But they
you
don't
should
have
be
approval
able to.
yet. Can you really say without approval?
thought they did. My bad.
they're on
Yeah.
accelerated path to getting their
it.
phase 3 approved. Yeah, so but my point is they're working with legit places, and
Yeah.
imagine every year 2 partners, 4 partners, 5 partners, and then you're still signing up more partners while your old partners are getting approval.
The
It's just gonna
scalability
be-
is ridiculous. That's why the runway is wild to me, and they're only a $400 million company. But yeah, continue Arcutis.
Yeah, so Arcutis, I just turned it into a 10% position, as I was saying. Look, you mentioned early on, you're adding to it because it's a commercial stage company. 100% agree with you. I think it's important though, because you said it's an expensive company. I really don't think it is.
Let me see
Because-
why I said that.
So I was reading these comments. I think it was maybe from the TD Cowen notes. Basically, they have a 3% market share right now, and they think that they can get up to 15 to 20%. So that would be
By
a
the way,
5 to
the
6.
market Zoriv, if you guys want to look it up, it's the Zoriv product for the market share.
Yeah. So what did we say? They do like 160 million in revenue right now.
Yeah,
And
167. Yeah.
so, if you and realistically, that revenue wasn't fully ramped up that was in 2024, but the product hadn't really ramped up. So I'm not sure like if they just did 70 million in revenue, let's say they're actually at a $300 million revenue run rate, right? And that gives them a 3% market share position. If they were able to get to 15 to 20%, which these analysts think they can, then that's a 5 to 6 to 7 times their current revenue from here. So peak sales are going to be 5 to 7 times 300 million. So it's 1.5 to 2 billion. So that's their peak sales number, assuming that they can't expand their TAM, assuming that their pipeline is worth 0. And typically in the biotech space, you want to value these things at like typically fair value is around 2 times peak sales, something like that. So, the stock's trading at like 1.6 billion or whatever it is, and they have cash on the balance sheet. It's probably like undervalued by 50% or so.
So the reason sorry, go on, Sam.
I mean, I'm looking at the EV to sales, so that accounts for the cash that's on their balance sheet versus the debt, and they're trading at 8.2 times. I don't really know.
But that's what
well,
wait, but
actually,
that's
sorry, that's TTM. Forward is 5.3.
yeah, exactly.
So I will say though, my only caveat, the reason I'm like, first off, I have a top 5 position now in RQT, like in my small cap. I think I was digging into them the past couple weeks. Like I am so freaking bullish in this company, just because the Zor product, like it is just the amount of, the explosive nature of what could be for that steroid and dermatology side of the business is like absolutely massive. Like they have a clear expansion catalyst that's happening right now, because I think the FDA decision for the Zoriv foam in the scalp and body is like set for in 3 months or 2 months. Don't quote me on that, guys. But I think the reason I was saying the debate is like overvalued at 1.6 billion is, I don't know, they're trading at 6 times forward sales. Let's just say that, but they're trading at 20 times 2027 EBITDA. So I think the top line's growing at 40%, and it's going to be slashed down to 20% in 2028. They're going to be growing their margins substantially there, but by then it's not going to be a hyper grower anymore. So I think there's somewhat of a disconnect from what I'm reading on the research side and what the fundamentals are saying, which totally could be the case, because that's the beauty of the small cap world, where a lot of time they don't get the coverage like the mid cap and large cap tech companies do. It's not like 40 analysts cover this name. There's usually a handful of analysts who just cover it, and they're not really up to date as much. But I do think the market, if you look at the price action recently, I think the market's kind of finally seeing what the early believers understood, that this isn't just a biotech burning cash on a long shot drug, like a trial period. It's like Arcutis is absolutely scaling into a major player in the dermatology space, and they have a clear product market fit. That's absolutely obvious. They have increasing pricing power because you're seeing it right now with their margins expanding the next couple of years. And they have a business model that's approaching break even in the next like 18 months. So I think their most recent print was really strong. And I also think they're kind of not doing the hims and hers playbook on the marketing, but the D2C, like that's their way of like, they're trying to tackle that for their marketing. They're campaigning with like OBJ. You mentioned that last week as well. I just think that they're turning to this like lean digital first approach for marketing their product. I think that is like the way to go. You're clearly seeing it succeed for Hims and Her Health. And I think that what's the word? Is it topical? Yeah, the topical steroid conversions market is like, there's like 16 million subscriptions, I think, or 17 million subscription market opportunity across all those approved medications. So like I know for a fact, dermatologists are actually shifting away from using steroids because of the long-term safety concerns. And Zoriv is like kind of well positioned and captured that kind of migration. So it's a great niche product.
Real quick, just because you're saying, 17 million. So again, last week they had their supplemental new drug application, which and it's supported by phase 3 trial data, so it most likely gets approved, and it would add another 1.8 million children aged 2 to 5 to that TAM. So that's what I'm saying. Like, we haven't even really seen the full extent of what this company can do, and that's assuming that their pipeline is worth zero, and that there's not going to be other indications that this is good for, and there's not going to be further label expansion. This is and again, they just did 55% revenue growth quarter over quarter. Right?
Guys, they're up 12% this week. Let's just say that. And the market's
in this market. And
Yeah.
that's because they just had a analyst day, I think, somewhere or something like that. I think maybe it was TD Cowen or something. But the notes were extremely bullish.
Well,
I follow a guy on Twitter, and he's like,
biotech has been doing pretty good this week, actually. It's been outperforming this week. So,
dude, because there's no one left to sell it. There's no consumer exposure. It's a good thing to own.
No, that is true. It is a good hedge.
And
did you see that insider buy? I'm looking at Robinhood right now. In March, 330,000 shares got bought from insiders this month, like just this past couple of days.
On Arcutis?
That's interesting. Yeah.
It looks like a bunch of sales when I look it up. I might be wrong. No.
In
March, it looks like a bunch of sales.
That's $4 million. It's
Look, I'll send a snapshot in our group chat right now.
Yeah, it's weird. I'm seeing sales. I feel like you're probably thinking of awards or something. I'm imagining, potentially.
okay. Here's my laydown on this. I'm not discounting it because I actually want to look into this because honestly, I haven't really been giving too much love in the biotech space. But you were mentioning the 2027 EBITDA. There's only one analyst that estimated that, and it is like an outlier compared to the other years. And to be honest, this year only has two analysts. Oh, sorry. Yeah. December 2025 has one analyst. The next year is two analysts. Next year is one analyst.
But that's the beauty of the small cap world. It's a leap of faith. That's why it's so difficult.
This is like, okay, so I don't think you can use analyst estimates for this unless
you cannot. That's the whole beauty
you
of small cap investing. You have to be the analyst. Whereas when you're in large caps, there's so many analysts covering every single name. There's no edge.
Exactly. I mean, well, it's not that there's no edge. It's just that like that's public information, so you have to assume that's already priced into the market. So like there has to be. I mean that. I don't want to go into the way that it
covering it.
Yeah,
no, I mean, but it's an important topic. I mean, this is why we do small cap investing, is because like there's a lot of people who can tell you, what Snowflake's gonna maybe earn, and maybe Snowflake's a little bit more under the radar compared to like an Amazon or something like that.
Yeah, they're not gonna be too far. Well, they're not gonna be too far from whatever the estimates are, like unless they totally surprise.
That's what I'm trying to say. But there are no estimates here that are reliable. Is my point.
Well, there's only one.
Did you guys see where their headquarters are?
Yeah, it's right by us. My friend drives by it every single day.
I grew up next to it, it's in Westlake Village. That's
are they subletting a bedroom from you right now? Is that where they're renting from? Just go to the bedroom next door and be like, hey, Arcutis, you guys doing good over there? You good? Should I buy today? Should I not buy today?
I'm just saying we can interview the CEO in their headquarters. It's not that far of a drive, and I feel like this name needs more coverage out there. Yeah, new room next door.
Look, this from the pipeline. They have a pipeline and they have like a alopecia thing, but it's still very early. It's in phase 1B. There's a readout coming soon.
In May, yeah.
Management used the phrase "first evidence of efficacy." I mean, there's something here, man, and that's just like optionality on top of the core business. So
totally.
We'll have to see.
But how
We
do
can move
you?
on from this one.
I guess like
Oh no, this is great. No, this is great. This is the micro that we're trying to get into because like
yeah.
Arcutis, like
So how do you like what really? I mean, you have way more experiences than I do. So I'm like I'm looking at this from outside perspective. You know, someone who's invested mostly in like $10 billion plus companies for the most part. But like, what builds a conviction so much for this to make this position like more than 1% of your portfolio?
I mean, I don't see why it's any different than any other company. They have a moat with their FDA approval. They have a strong product. I mean, it's just like studying any business. And like, here's the thing, right? And people are, I always like to use this analogy. We know people who own their own businesses, right? We might have friends or cousins or whatever, right? They have 100% of their income and reliance on a small business in which they are completely responsible for. If I created a portfolio of 10 to 20 companies with basically world-class management that I feel pretty confident with, what's wrong with allocating 5 to 10% of my capital towards them? And it's not even related to my income. I mean, I still have a day job. So to me, it's not that big a deal. And I see a lot of upside. And also, like, you want to, when you're right, you want to make good money. So 1% really isn't going to move the needle here. I would price, I would only size something at something like 1%, might not even bother to be honest, but 1 to 2% is something that's completely speculative that you could see like 5 to 1 upside. Either this is a 0 or this is like, it's a call option, it's going to go up 5x. Like for instance, I do have one clinical stage biotech in my portfolio, but it is priced at, it is just position sized at 1% because the upside could be tremendous. But the downside could be 0 if they fail, but you know that's for
I
another
mean,
topic.
I do kind of feel like Sam's like because Snowflake's a 10% position for me, and I feel like we all understand Snowflake so well, and there's a recurring revenue nature to it. I still have like, oh God, Snowflake's 10%. Like I'm putting a leap of faith because Neuro default's price action. They haven't really proved too much that I'm right, but I do want to call out as well. Do you know the this we're super bullish on Arcutis guys, like we are. It's not a monopoly. There's a competing product out there, and I'm trying to find the competing product. Is it Amgen? I think it's.
Excuse me.
It might be Amgen. I'm trying to look it up, but do your own research because this is not a monopoly. There is competitors in there, but
This is interesting because I'm like I have a chance to like pick your brain on this, and I'm sure a lot of people are curious too because if you're on mainstream media, there's a good chance you don't invest in small tech biotech stuff, right? Small cap biotech stocks. And it's good to have this, honestly, power is knowledge. Sorry, knowledge is power and asking questions. Like I never think there's any such thing as a dumb question. So I'm going to just ask dumb questions, right? So
No,
like,
that's fine.
what is the thesis breaking quarter or news when it comes to
Growth
it?
slows down, prescription growth is coming down, but the thing is that there's always leading indicators for that. Like people are tracking script growth and stuff like that. So I know a lot of like random industry professionals or like I know different fund managers. Like the thing is like you ask me like how do you size this at 5, 10%, right? And it's like, dude, I know guys who run like biotech funds and they only own biotech. So it's like those are the people that I'm chatting with and like that's who I'm getting kind of a lot of feedback from and like ideas bounced off of. So like I'm talking to real specialists in this field. That's why I feel confident whenever like, you know, I'm not necessarily borrowing conviction, but I'm learning from them. And I don't see why it's any different. And especially, I just want to call out, right? Like I'm not in speculative clinical stage biotechs. We're talking about commercial stage, already got FDA approved. Or yeah, I mean, even the picks and shovels companies that I have like ClearPoint Neuro or MaxCyte or whatever, they have FDA approved products and they are picks and shovels. So they're going to make money no matter what. So I'm in actual businesses. I'm just studying a business with a product. It happens to be in biotech. We are all good business analysts. And I just find that there's a ton of value in biotech right now because, dude, I could pull up the chart for you of XBI's drawdown for the last like 20 years since inception. And in 2008, XBI was down 33%. In 2022, it was down 63%, and it's still down 50% from its peak in February 2021. And that's after, I think last year, they reconstructed the index to take out a bunch of like these shitcos basically and put actual legit companies. And it's still trading 50% below those highs. So it's a sector that's just been completely decimated. And it just feels like the perfect time. And you know, you've been telling me like, you know, you nailed the China thing with, I think China's all about timing. It's not like Baba and PDD and KWAB, whatever, they weren't cheap a year ago, but sometimes with rotation, it's all about timing. Those stocks were still cheap back then. Biotech stocks were still cheap a year ago, but now it might be the right time to be rotating into other places. And I'm just seeing, when I see like large cap companies in US trading for 30, 40, 50 times earnings, and then I see biotech companies that are down 70% and they're actually doing meaningful revenue, real upside. I mean, yeah, and in terms of market cap, dude, the average weighted market cap of my portfolio is like disgustingly low. Like we would never.
Your
You guys would
portfolio is
never-
bigger than the market cap.
Yeah, you guys would never. You guys would never approve of what I do.
I mean, yeah, that's it. That's your style of investing, and clearly it's worked for you. So I don't think there's any type of criticism anyone should ever give, because at the end of the day, we're all trying to make money. So it's like, why would someone criticize someone for how they're making money? That's like saying that someone's job is stupid, even though they're making money out of it. Like, that's what they want to do. It works.
I'm not gonna name the ticker because I'm not gonna sound like a pumper, but dude, I re-entered a company today, and you won't guess. It is a 7 million market cap. 7 million.
So you bought the whole float.
No, but
Okay, I gotta ask them, like, what made you confident buying that name when you've seen some like high conviction names like kind of pull back 30% in the past month? Like, why take the risk?
They were expensive.
And like,
some of those high conviction names are expensive.
because there are real fundamental theses. Look, there's some companies that shouldn't be trading on public markets, and I'm just taking advantage of those opportunities. That's how I see it. Like it almost feels like I'm getting into a private deal because there's like gems on the market. Like this one is not biotech. This is just an actual company. Basically, they had like $14 of share on the balance sheet, $14 of cash per share on the balance sheet, and the stock trading at like
so it's
8
a
or 9.
value play. Okay.
Yeah, well, they just went into like an agreement to buy like the largest market share vape seller in Canada for a minimally dilutive deal or something through like this amazing financing, and they had cash. So it's just like the deal kind of feels like a slam dunk, and I think they like promised shares in the deal to the people that they're buying at $19 a share, and the stock's at like $8. So it's like there are like these weird scenarios in public markets. So anyways, I don't want to jump into that because it's really small, and I don't want to talk about it because I don't want to seem like I'm some weirdo dude. But anyways, I'm just saying I'm really comfortable with small market caps is all I'm trying to say.
I know, that's really interesting. But before we continue, I want to like take a look at crypto. Crypto is not doing well at all. But speaking of crypto, if you're into crypto and look for ways to add it to your IRA or stock brokerage account, check out our partners at Osprey Funds. They offer easy access to crypto through traditional investment accounts, and there's no need for wallets or exchanges. The Solana Trust, ticker symbol OSOL, and Binance Coin Trust, OBNB, let you get exposure to these assets right from your brokerage or even your IRA. This is just a heads up, guys, to explore your own options and make sure you do your own research. This is not financial advice, but if you are interested, you can start by checking out their website where you'll get a prospectus and more details at ospreyfunds.io. That's OSPREYFUNDS.io. Okay, so
let's talk crypto because I think it's gonna go down another 20%.
It's not a good time to
Great
tell you.
question.
Hey guys, check this out. Crypto's a shit place to be right now.
Think about it, because it's held up surprisingly well, like really
I'm
well. in the
really
pullback we've
surprised
had.
it's held up this much.
Right?
To be
It's
honest.
90,000. 90,000 has been the floor of
Yeah.
like, if it breaks that, there's a pocket to fill. I think a lot of it was baked expectations from this reserve. And when Trump says like, or whoever said it, I don't even know who said it. David Sachs, I think, said it actually.
The crypto
that they're not gonna be
czar.
the crypto czar. We're not going to be actually buying Bitcoin and crypto. We're going to not be selling it, but we're going to just be whatever gets stolen. We're going to put it in there. Essentially, there's not going to be billions of dollars of flow hitting crypto. I think that was causing the relative strength in the space.
Yeah.
They're going to fill the election gap now because we filled the election gap in the market. SPY and QQQ,
Dude,
Trump winning did nothing anymore.
it's like 50 something K, man. It's like
That's what I'm
60K
saying.
or something. I can see that happening tomorrow.
No.
Tomorrow.
No. I think. Do you think it's gonna hit 70K tomorrow?
No. I mean, I said I could see it happening tomorrow. Like, because we're recording on Thursday night. Tomorrow's the ADP unemployment numbers. Like, I don't want to get into all that, but like,
I think it might be a week. It might be a weekend.
Yeah.
Plunge.
Oh yeah.
That's
Okay.
the
Happen
thing.
Sunday night. But no, I agree with you. But
I think it's NFP, right? Tomorrow, not
non-farm
ADP.
payrolls. I apologize. Wait, ADP, non-farm payrolls.
But
it's from
so
Okay.
if Bitcoin goes down 20% to 70,000, let's just say that. What happens to Robinhood? Because their chart's breaking down right now.
Listen, I got something to tell you, and there's a reason why I added Robin to my portfolio, but it is such a small, it's like one of those monitoring positions where it kind of like gives me a little oomph to do more due diligence
What's
on.
bigger, AppLovin or Robinhood?
Oh,
when you
AppLovin,
added?
dude. AppLovin.
It is okay.
Yeah, and AppLovin is like even a small, it's like starter position. So Robinhood is like a starter of a starter position. Like I haven't even started doing deep dives on it, but it's a starter to do the starter. But no, I actually wanted to say earlier when you said David Sachs and I was like, he's the czar. It's like, it's so typical for like the crypto community, you know, because it's like, oh, you want to be the secretary of cryptocurrencies? No. How about the chairman of cryptocurrencies? No. How about the right? No. Why do you call me the czar? Like it's like some sort of medieval Russian king or whatever. It's like, I don't know.
Well, is it too late to change our title to investing with the czars?
Let's do it, man. Let's come with some gold crowns, put them on. No, but no, I know that's interesting. I was actually just talking to a buddy about that the other day. It was just like Robinhood is such like, I'm surprised it's holding up so well considering how much it's went up, and even Palantir. Don't get me wrong, Palantir is
Robinhood's
great.
not holding up that well. I think it went down 35 to 40%.
I know, but that was like in a matter of a week, you know. But what I'm saying is that like I could see Robinhood getting down to like the low 30s. And probably even worse because it's always going to overshoot it because of the fact that like, dude, when crypto's falling like this, like there were very little crypto transactions. Like you, me,
Yeah.
and Logical, like we're staying away. Like I'm adding to crypto, but like maybe 100 or 200 at a time, like every week or something. Like nothing big, you know. Like I don't care if that goes down. Like that's fine. Like I'll just keep adding. But what I'm trying to say is like, if that's how we're dealing with it, I'm sure there's a lot of people who are taking advantage of those transactions when crypto is all the way up there to now where people are like, I'm going to like stay away from crypto because I don't want to lose my money and everything. Like how many people are thinking that? And how many people are thinking that crypto is going to go lower and stuff? It's like, dude, Robinhood makes a lot of money off of their options, but also their crypto fees. Have you ever bought crypto on Robinhood?
It's brutal. They weaponize the volatility or they weaponize the spreads.
Yeah.
Let's just say that.
And you're basically giving
crazy.
5% of your purchase up front. If
Well,
that
so does
stops
Coinbase. Yeah, sorry, go on.
Well,
I was gonna say,
Coinbase is a little bit different because Coinbase is the custodian for a lot of the crypto ETFs. So these companies that own the ETFs, they basically give Coinbase this money, and Coinbase just holds on to it, right? So it kind of like solidifies their position for Coinbase, where they can turn around, they can loan money out based on that percentage and that spread. So Coinbase does have an edge there, but Robinhood is not. They are not the custody of a lot of these ETFs at all, right?
Well, I don't think they don't want to be though. I don't think they want to be at the end of the day because like they want to kind of go away from that crypto angle because you saw the past 2 years. Yes, they're printing cash from crypto from the transactions, but they're trying to become that financial ecosystem essentially.
They're definitely
with all these plays. Yeah,
they're definitely working on diversifying the revenue stream, which is the reason why I kind of like it, you know. And also, they're a software company, right? Like they're totally a software company. They build an app that's very versatile. Their QA team, I would say, is very good because they're able to catch.
I'd
up
say
with
they're
SaaS
more of
products.
a media company almost. Like they're turning to somewhat of a media company, media enterprise.
Yeah, I mean, I guess, but the thing is like I could definitely see Robinhood doing very well in the long term, but like it goes to say as well, like why would I buy big here if I have a pretty good feeling it's going to go down lower? You know, like there's one thing like if I'm buying Amazon here and if the market goes down, the market goes down, but like we've seen a lot of prices of these very good strong mode companies come down a little bit, which could probably go down more, but I don't think there's certain things that people are thinking about when it comes to certain companies like Robinhood where we get less crypto transactions. And if less people are trading options in the market, and if less people are trading because they're scared the market's going to go down, they don't want to lose their money. Or if we go into recession, people are doing a lot less of that. Unless you're Shamath, where it's like, hey, let's go. Like we have billions of dollars to spend when there's recession. What happens to these brokerages?
Well, that's what I'm saying. Like, why bother owning a name when you have that kind of tsunami that is going to occur eventually? Like, we're never going to have a perfect environment where that recession won't occur. I'm sorry, that will never happen. So I always ask, like,
Wait, what won't happen?
Fintech, like a recession, like there's going to be a extended period of time when consumers are actually like you can't buy and hold stocks. Like you actually need the cash to live your everyday life.
Yeah.
So I'm like that consumer risk. I'm like, why bother? And that's why I love like investing in companies with business spending. It's a B2B. B2B is my favorite.
Yeah, enterprises. Yeah,
is just the way to go because you don't have that risk. And right now, I think we're talking a little macro now, but like GDP's negative growth, and we're seeing
It's a
consumer spending
forecast.
dip.
That's a forecast.
It's a forecast, but growth is dipping. We have this consumer spending dipping as well. We have workforce reductions. Layoffs are increasing. I think the market's pricing in a recession right now.
Yeah, they
Not a
are.
recession, but like there's recession fears.
Yeah.
Slow down for
That's
sure.
Slow down.
That's detrimental for a brokerage. Like that's
Well, yeah, I was gonna just say, let me jump in here on Hood. I actually think that if we had a prolonged correction, like I'm not talking about like we V-shape recovery. Like if we V-shape recovery,
Yeah.
Hood will be fine. But if we don't V-shape recovery, Hood is probably one of the best shorts on the market. And that's probably a hot take. But, my buddy and I were chatting about it because look, if you're losing money every day in the market, what did we talk about in the last few weeks? We were saying retail participation is at all-time highs. People are coming into the market, they want to make money, they're buying Hims and Hers Health at $70 a share, right? So there's crazy manic stuff happening,
down.
price insensitivity. But what happens when their stocks stop going up? What happens, dude? I talked on Spaces today, and I was saying like things about like, yo, don't be so quick to buy dips. Maybe you give it a second, dude. Multiple people were cussing me out in the comments. I had to block them. It was like, I was just like, I'm not gonna pay attention to this. But that's what's happening right now. Is people are upset. They're emotionally attached to what's going on, and I don't blame them because there's money at stake. But so if Hood is the retail brokerage company, what happens when retail takes a step back? Right now, we are at peak retail participation.
I think they
If
already
we had
took a step back.
Yeah, yes, exactly. And so that's why you're seeing Hood down 20, 30% off the highs. And honestly, that's probably going to get worse. Look, let me read this for you from Q4. So transaction-based revenue, right? So they had $1 billion in revenue. 670 million was transaction-based. That's 200% increase year over year, primarily driven by crypto. Revenue of 358 million. Crypto transaction revenue was a third of their total revenue, up over 700%. I mean, options revenue, 222 million, up 83%. We are seeing peak craziness. You think that's sustainable? It's not sustainable. These are cyclical things. And I think that what people don't understand when they're buying stocks is like, these numbers are great. It's like, yeah, but that's what happened. What's going to happen in the future?
Exactly.
And so, and also, I was just going to talk about the Coinbase thing. Coinbase is a little bit better. They still, like, you still get shafted on those spreads if you're just using the regular Coinbase user interface. But if you have the toggle for Coinbase Advanced, you can actually set limit orders. So if you set limit orders, so that helps you stop getting destroyed by the spread, but you still pay the fees.
There's still a race to the bottom on brokerage fees. Like there's going to
100%.
be no brokerage fees. So like Coinbase is going to lose that lever eventually. I don't know. I think Coinbase is just purely a pure crypto bet in a hot cycle. Robinhood has been making moves for past 2 years to get out of that cyclical risk, but I agree with you. Like logical, or it's hard to predict Robinhood's revenue in 3 to 5 years.
No, of course. No, I mean it's going to be purely based on the retail cycle because that's what they are.
That's scary. That's hard. That's really hard to DCF model or do any kind of predictions for a long-term holding because you just never know. Right now, like I will say like I want some Robinhood because I think they actually have a moat in what they do in their space. Like it's defensible. I just don't like the fintech space. I really don't, and it's just like.
I think just just wait for if we get a prolonged downturn, you're gonna be able to buy Robinhood at cheaper prices.
So how would you even value Robinhood though? Like Sam just said, it's a software stock potentially. Like, do you value them as software stock? So like, do you value them as like an EV to like a free cash flow metric or net income metric?
I would probably look at what they're going to earn in an upcycle and then try to buy them when they're very depressed, right? And yeah, I wanted to talk about a cyclical right now too, actually.
Wait, I'm sorry. Before you talk about that, because since we're already talking about crypto, I just wanted to relay something because I'm looking at Robinhood's. I'm looking at Coinbase's shareholder letter from last quarter, and this is the reason why I don't think Coinbase is necessarily the same as Robinhood because half of Coinbase's revenue they earned $3 billion last quarter. They earned $3 billion. No, wait, what was over here? They $6.2 billion last year, or in fiscal year 2024, which is the quarter they just reported. Let's see, they earned $4 billion in transactional revenue, which is, of course, your transactions. But
mostly retail. That comes from mostly retail.
Okay, but
so to put that out
hold on a second. $2.3 billion is in subscription and services revenue. Okay,
which was also retail, though. It's Coinbase One. I had it too. what happens when retail participation comes down? Custodian fees, they're not making a lot of money for that.
Yeah, it says 141 million.
That's what I'm saying. These are very cyclical stocks. When the craziness goes away, and I just wanted to make one more comment about crypto. Look, I traded crypto. You guys know I'm into it. I love the degen stuff. I love trading it. I made good profits in 24, but I don't overstay my welcome. I play the cycles. Once people start telling me, oh, you know, this altcoin is going to change the world, and I'm like, okay, dude, like, let's just remember what we're doing here. These are like,
I told you that in
Trader-
confidence.
Let me take
buddy.
your receipt. This person is.
when I start hearing that, I'm like, okay, I got about like 3 more weeks of like this run probably, and then I'm
Yeah.
out of here. And look, it's somewhat still based on the greater fool theory because we don't really have anything other than price goes up. Like, yes, there are Web3 applications, and I believe in them. I've written a lot of articles about them. I've actually studied a lot of these companies. I actually do believe in decentralized finance. I understand the points. I understand the tokenized assets. I totally get it. But it's just not happening, right? So that value isn't here right now. And so in this current cycle, we're still not there yet in terms of seeing it as an infrastructure. Like, it's not disrupting Visa today, right? It's not disrupting all this stuff today. And so in the meantime, the fundamental case isn't there. And so it's still the greater fool theory. And the US government basically just came out and said, yeah, I mean, and we just got news that they're not actually buying any crypto, but they're only holding their current crypto. But my thought is the US government's in on it, right? Now they're in on it. So
Sucks that
they
that's
are
an
the
exit
big,
liquidity.
they're the biggest fool theory is my point. They're the biggest fool. Who is bigger than the US government? There is no bigger fool. No one remains. So to me, very bearish, I think. I'm pretty bearish crypto personally. So
It's so funny because, like, I know you're going to be right. And it's just, it's so funny because, what was it? My brother-in-law, he does not follow financial markets, right? And also, I have a lot of people in my life who does not follow financial markets. And like, some of them ask me, like, hey, do you invest in crypto? And this is when Bitcoin was like over 100K. I'm like, this is it. This is it. You know, at the same time, like, I've heard that along with stocks as it was going up, like with Nvidia and stuff. Like I heard the Nvidia thing when it was like $500 pre-split, and then it became like, you know, 1,300, whatever. When I heard the crypto thing, I was like, get out of here, man. And then Trump started pumping it. I'm just like, oh, like, I hate the fact that our tax money is exit liquidity, but there's nothing I can do about it. I don't want to get political about it because honestly, it is what it is. Like, this is just, I can't tell the government what to do because 330 million people already did, so I can't really do anything.
just wanted to talk while we were on the topic of cyclicals because obviously right now there's a big question mark in the stock market about the cyclicality of these semis because right now they look like they're ready to fall off a cliff. Maybe AVGO's green after hours on earnings can save them.
I do wonder.
I don't know. SMH looks very weak. Looks like a stage 3 distribution top. Looks like it's ready to roll over to stage 4. But before I go into semis or even if we want to explore that, I want to talk about cyclicals, right? We just talked about crypto and brokerages being cyclical. Adtech is very cyclical. And dude, it breaks my heart, but I have reduced my Magnite position by like 90%. And that
90? Why not just sell the whole thing?
This is after I listened to a freaking interview with that.
I mean, because I love this stock and I love this company and they have a tremendous upside. What I plan to do instead, Shai, is I have a small call position and I'm going to constantly roll that out. So it's going to be like a 0.3% position. So that way I can just risk that. And if we turn around in the market, if the stock catches a bid, then I can exercise those calls and I can ride the stock up without risking having a huge position. Because, dude, just today, Magnite already lost the 200-day a couple days ago, but I thought we were going to break above it. Today, new lower lows. Didn't like to see that. The weekly chart, it was like, okay, the weekly's still in place. Just lost the 200-week and the 50-week MA today. Like, maybe we get stick safe tomorrow, but it made me start thinking, hey man, I've been rugged in ad tech stocks before. If the market is saying, yo, we might get a consumer slowdown, you have to understand that the ad market is very cyclical. It's very tied to the consumer. And if they pull back, you get screwed.
I love
That's why it's
back.
really important to invest in the best, though. I know I keep saying this, but like,
It won't
Trade Desk
matter.
has a 40% margin cushion.
Dude, I love that it's going down. Like, that is the best time to invest. as it's going
No,
down.
so it is very cyclical. I will agree with what Logical is saying. Like, I think, what year was it? Was it 2023? It was like a brutal year to be an ad tech. Like, it was just like nobody was spending money on ads at all in 2023. Dead money. But I still think the reason I haven't, you guys know this. I have an agentic AI vision of what the world's going to be like, and I think that the products are just going to be 1,000x than they are right now. Everyone's going to need to advertise these products. Like, they have to, especially with all these products being so similar to each other. That's something that AI agents can't do for you. They can't. You need sell side and buy side, demand side platforms. You just need the trade desks out there. So like, I think there's going to be a massive tailwind that's not being at play yet that hopefully makes them like not have that headwind of the cyclical risk associated to a potential recession, because I don't know, maybe if people are struggling to like work those W-2 jobs, they're going to put their mind to learn how to create these AI agents to make money for themselves because they can't get jobs. So you have to be their own boss, essentially. And that creates this massive like ecosystem flywheel for ads, maybe. Who knows what. But either way, for Trade Desk, like, it held well today. It was down less than 2%.
Well, it's because
today.
they already got a 50% haircut.
Exactly.
Yeah.
But
I've been waiting for the COVID. Like, I love anchored average VWAPs. The COVID bottom anchored average VWAP
like
for Trade Desk.
Right?
No, it's held up really well every time it's pulled back, and it's at $64, and it's at $65.
No,
now.
I'm buying Trade Desk, but I only had to start a position in Apple Oven. I want to look more into them. I'm staying with the leaders, but you know the thing is that.
Well, before you get into it, do you feel like it's repetitive though having two ad tech names? Because I feel like
Sell side
that is
and
risky.
demand side.
They're kind of. I think that's. I don't know. I feel like sell side and demand side is just going to be no longer. They're going to be infused together. It's like data lakes versus data warehouses. They're all infused essentially now.
I mean, you know, eventually they might infuse, but I think if it's going to be anything, Apple Oven's going to be one that's going to infuse it. However, at the same time, I'll be realistic. Apple Oven is pricing in a lot of its future or continued growth, and there's a chance it might slow down. So that's why I think this is probably the best time to like slowly build a position versus like just going all in and thinking this is the bottom. Because like Logical was saying, dude, very cyclical industry. I mean, I was just listening to an interview with Michael Barrett today, CEO of Magnite, and he was agreeing with you on it, which is basically saying like this whole business is just going to be automated at some point. So I think like at the end of the day, if you're not already automating, or if you're not building some sort of automation or AI powered ad platform, you're going to get phased out, right? You have to already be capitalizing on that, because literally at the end of the day, everything's going to move so fast that there will not be any point of these companies whatsoever. It's going to be the technology is going to be obsolete, but that might not happen for a little bit. I don't think it's going to happen in the next few years. So we got a long time.
I'm talking
2028.
I think it's going to happen. Like, it's not anytime soon.
That's like 3 years from now.
I think 3 years. I think things are going to happen quick.
It's like COVID yesterday, man. That's less than COVID. Why?
It's a crazy time to be in. I'm telling you. Like,
I don't
it's
think
going to be a crazy time.
Man. That's pretty. I'm a little realistic when it comes to the AI explosion. I don't think people are going to like discover some new technology on Mars and propel us 100 years into the future. To be completely realistic.
No, I'm not saying that.
Yeah.
I'm saying the smaller players aren't going to be able to succeed as much in 3 years.
I thought
private equity routes.
I apologize. I thought you're saying AI is basically going to control the entire industry by 2028.
No,
yeah, I was like,
no.
What?
I think like the Magnites, the Pubmatics, I don't know. There's a lot of smaller ad tech names. I think they're just going to consolidate. But App Lovin', I don't know. We have to get into App Lovin' next time.
Yeah, next time. Not right now.
So much like FUD being into that stock that we need to talk about that, because this could be a massive opportunity.
To be honest, just even touching the technicals besides the actual company itself, if I look at all three of those ad companies overlaid, they're all going down. So I don't think this is necessarily because App Lovin' is having like bad FUD and stuff. I think it's because of the fact that they're all going down, and this is just the reason for them to sell.
That's what I'm saying. I'm saying be very wary that we could be at peak cycle for the ad market if there is a weakening consumer.
We already hit the peak cycle for the ad market.
That's all I'm saying.
Yeah.
And I sat through a 70% drawdown after Pubmatic posted the best results in Q4 2021. I just know what it feels like to get rugged in these things. That's
you owned it back then? I didn't know that.
I've studied Magnite and Pubmatic for like 4 or 5 years, man. I know these businesses pretty well. Yeah, I don't necessarily think the whole supply versus buy side gets consolidated. Also, something to note, Google is still, like, the verdict is still out on the Google antitrust trial for the Adtech case.
True.
So, dude, if that comes back unfavorable for Google, which by the way, they just had an unfavorable ruling a few months ago. It's like the DOJ was making an example out of them. Magnite, Pamatic, Trade Desk, they would be up like X overnight, I think. Like, because they would be able to absorb a lot of that.
Yeah.
Imagine you're getting 10% of like Google's revenue overnight or something like that. That would be crazy. You know, you guys mentioned talking about App Lovin' next time. We probably want to cover ASTS because we all kind of have a position there. So that'll be a good one.
100%.
I think we can do that next time.
Should I go over earnings calendar? Do we have earnings really next week?
Yeah, I don't know. I mean, earnings season is basically over now, right?
We do a little bit, not a whole lot, but we do a little bit.
Let me see.
My God, dude, I'm so happy I left Braze. Can I just explain to you guys? Look, man, Braze was such a good stock, okay? I didn't sell it at 48, like maybe I should have, but you're never going to time the top on these things. But dude, when it sliced through the 50-day on a really bad day, it made no sense to me when they had good news. Dude, I sold it around like 41.40 or something like that. And the stock's at $34 today, man. Sliced right through the 200-day. So technicals, I know people are like, yo, like, don't worry about technicals. It's not that serious.
Absolutely
like,
not.
Believe
Look at the indices.
Save me like 20%, you know, 30%.
It's like SPY's been toying with everyone on the 200-day moving average, like for all day in a volatile session.
Yeah.
Like that is technicals matter. Like look at the indices.
I think sorry, I was gonna say every bit of information you can use to equip in your arsenal to make better decisions is important.
Well, exactly. That's why I'm never a proponent of like just fundamentals. You know, like fundamentals is very important, but the technicals really tell you when to buy something. Like I'm not like if I like Robinhood, I'm not gonna buy them when they're $60+ after earnings. Like I'm sorry, you know. But this is why I like to buy stocks as they're coming down because I don't know where the bottom is. But I'd rather not guess it and just buy slowly. Like, did you even look at Big Bear AI? I remember like everyone was talking about this on Twitter.
What a fraud!
It's a fraud
all
company?
I've told my subscribers, it's a fraud. It's not a Palantir. I wrote a short report on that company, and it's a joke. It's not a. When it was at $9.
Did someone?
I don't hold back, guys. I'm sorry.
Did someone reword the title of that and just call it App Lovin', and then that's what actually came out? Because to a lot of people that was a very convincing short report.
All right, let's go over the earnings for next week real quick. I mean, because Sam's right. It's a lot. We have Oracle Monday after the bell.
Yeah, that's a big one, man.
We got Redwire after the bell on Monday. We got Asana as well. Monday.com, CRM. Monday.com did really well.
Shoot, that's Monday? No way.
That's Monday.
No way.
We don't have. No, for Monday.com.
Oh, my bad. I thought it said Monday.com.
Oh, I said that in a really confusing way, so it's not your fault. Nothing on Tuesday. It's gonna be a dead day, so it makes me feel like maybe there's something macro-wise or something interesting is gonna happen. On Wednesday, we got Adobe, we got UiPath, we got Sentinel-1.
That's gonna be interesting.
After the bell. And then nothing else there. Thursday we have
Ulta.
We have Ulta. We have Blade. I know logically you used to like Blade. I don't know if you still do.
Hold position.
We got DocuSign, not a real company anymore. We got Rubrik.
Yep.
Rubrik
That's
is
a big
great
one.
one.
That's a big one.
I'll watch it. And we have
still
Service
big long
Titan
that
as
one,
well.
Sam?
I've been trimming as it went up, and I did a pretty big trim in like the high 70s, but I've slowly added back lately, but I haven't. I kind of want to wait until the earnings. I mean, I still have a decent sized position, but I'm in this for the long haul, man. Like this company is not going anywhere. Like this is the only company in its sector that's like winning. So
I would love to get into Rubrik. Like I would add that to my 20th position because it's not competing against CrowdStrike at all in like the security space. It's just so different.
It looks like it's gonna fill that gap to 55.
I hope it does. It's like 4 points away from that. It's not really.
Yep.
And then we also have PagerDuty, which I don't know how it's a standalone product still, but
I don't even know how that company's still around.
But I know you used to like Braze, but like last comments, like there's so many tier 3 software companies out there that will just not be around in a couple years.
It's very true.
They're gonna get acquired. PagerDuty is a perfect example. I think Braze might be one. This is a crowded space they operate in. Just be careful out there. But anyways, we're at the top of the hour. Great Kobe episode. Any final words, Sam Logical?
Episode 8, man, going strong.
Yeah, let's do it. Stay safe out there. Don't over leverage yourself. We're not gonna have V-shaped recoveries anymore. Those days are over.
Happens tomorrow.
Yeah, it happens tomorrow. After
We're up 3%.
This is Thursday night, guys. Night before ADP, so non-farm. So we'll see.
Yeah, just live to trade another day, guys,
Yeah.
because this is a marathon, not a
Survive.
sprint. So yeah,
Survive. Yes. Buy
see you
high
guys.
quality.
Take care.
Yes.